Time now for the word on Wall Street. Top investors watching your money. Joining me now is Michael Lee, strategy founder. Michael Lee. Also with us this morning is Gregory Farinello. Mike, great to see you. Thank you so much for joining the conversation. I want to get your take on this market slipping on this, the first trading day of September. President Trump warning that the U.S. will become a third world nation if the Supreme Court does not get involved and strike down a new federal appeals ruling, calling his tariff plan illegal without congressional approval. The president also says that India is offering zero tariffs on U.S. goods now, but he says it's too late. On Truth Social, calling the U.S.-India trade relationship one-sided. He imposed, of course, a 50% tariff on New Delhi. India's Prime Minister Modi is now in Shanghai at the Shanghai Cooperation Organization Summit with Chinese leader Xi Jinping and Russian leader Vladimir Putin. Those BRICS leaders scheduled a virtual summit next week to discuss President Trump's tariffs, rallying support for multilateral trade. Mike, a lot going on here. Your reaction?
Yeah, well, Congress delegated the authority to the president to regulate and even block any sort of international trade. So, of course, an appeals court in Washington, D.C. could come up with the idea that somehow tariffs are not included in that. So I expect the Supreme Court to eventually get involved. And let's just keep in mind, only portions of the tariff were struck down, not, all encompassing all tariffs.
That's right.
Struck down in this ruling, only portions of it. I think the Trump administration will eventually prevail at the Supreme Court level. So we'll see how that plays out. But in terms of the overall market and trade, staying on the topic of India and China, both India and China have had very high tariffs, very high trade barriers for several decades. And what it's done is produced a very robust industrial manufacturing base for their countries. To think that it will somehow work out differently in our country is a little bit ridiculous. So I think that is how things will play out here with these tariffs over time, along with the big, beautiful bill, the deregulation that we're seeing from Lee Zeldin at the EPA. And then from an overall market standpoint, I could not be more bullish. The money supply is up 4.8% year over year. Analyst estimates are too low and starting to increase, which almost never happens. The history of analyst estimates are that they're always too always too bullish and get slowly revised down as we head into each quarter. We're seeing those numbers come up. Again, we just had the big, beautiful bill passed, and we are going to get a massive labor revision on September 9th, most likely a result of the overestimation of job growth from the birth-death survey. So we're going to see 500,000 jobs from the last year taken off the table, which puts a 50 basis point rate cut on the table from the Fed. I don't know that we'll necessarily get that, but it's going to enter the conversation. So fiscal stimulus, monetary stimulus, analyst estimates too low, and AI going on in the background. I think it's a great time to be a stock investor. I'd be buying any dip.
Mike, you make so many great points there, so I want to underline it because it's true. The federal pushback on President Trump's tariffs, calling them illegal unless Congress does something about it. This pending case is over the IEEPA. That's the International Economic Emergency statute, which is the additional 2025 tariffs on Canada, Mexico, China, and the reciprocal tariffs. Tariffs stemming from Section 232 and 301 and the de minimis exemption expiration are not impacted at all. So, and he's got replacements for this as well. He's got Section 122 Balance of Payments Authority. That's a 1974 law that allows the president to impose an additional 15% tariff on imports for 150 days. And then he's got Section 338 of the Tariff Act of 1930. That allows the president to impose additional tariffs up to 50% on any country that discriminates against U.S. products as well as block all imports. So you're right. The president has lots of levers to pull here. And we'll see what the Supreme Court says about the pending case on the international emergency. There's also oil prices this morning, Gregory, climbing. Brent is trading near $69 a barrel. Russian supply risks dominating the conversation this morning, Mike. They're up 6 basis points. And I wonder if you would be buying financials here, because we just spoke with a technician who was just looking at stock charts, and he said J.P. Morgan right now is breaking out. Even as yields on the 10-year are up 6.1 basis points right now. Don't forget, after the close on Friday, the Federal Reserve released the stress capital buffers and the final capital requirements for the major banks. That was big news. They're effective October 1st. They could rise slightly when the Fed in the coming weeks when they finalize these stress tests. Your thoughts, Mike?
Yeah, look, I think the banks are a great play here. It's my second favorite sector outside of the AI trade, in that I see the front end coming down substantially over the next 12 months. I don't know if we're going to see the 10-year or the 30-year move very much to the downside. I think we get a steepened yield curve because the market and the interest rate, the term structure as they refer to it, Greg's the expert there, is going to steepen dramatically. And so when you have lower short-term interest rates and higher long-term interest rates, that spread widens for the bank all across all their lending products, where they can borrow short, invest long, or in the case of the bank, taking your deposit short-term, pay you very little, and lend long. That's what I think we're going to see. I think it's going to be a massive earnings boom for all of these financial institutions, along with an improving economy. So it's definitely a good era to be investing in the banks.
Yeah, I mean, I'm just wondering why the yield on the 10-year, Gregory, is spiking this morning, even as expectations are that the Fed is cutting in September. In